Anthony Miller was made Chief Executive of Westpac at the end of 2024, 4 years after he joined the bank as head of its institutional division, following a 20-year career in investment banking, mostly with Goldman Sachs, but also Deutsche Bank. He took over at the tail end of a horrendous period for Australian banking, and especially Westpac, which had been sued for allowing money laundering that contributed to terrorism and child exploitation. And before that, there was the Hayne Royal Commission, from which Westpac emerged as tarnished as any of the banks. And if that was the frying pan, now there's the fire. AI, cybersecurity, and the Iran war. Now, I spoke to Anthony Miller here in the studio, but that's unusual for That's Business because we'll mostly do these interviews remotely. So we can bring you anyone, anywhere. Hello, Anthony Miller. Thanks for joining That's Business.
Pleasure to be here, Alan. Thank you for having me.
Now, when you joined Westpac as head of the institutional bank in October 2020, the $1.3 billion settlement with AUSTRAC had just been announced. And that was for the money laundering, terrorism, and child exploitation financing civil case that they'd launched a year earlier. Now, what was the mood at Westpac like then? I mean, they were horrendous charges. So what did you walk into?
Well, I walked into a company that was very sombre, or traumatised might be another way to describe it, because what sort of stands out about Westpac since I've been there is how much affection the team, the employees have for the company. And so to be accused and to be found guilty in relation...
Did they lose affection as a result of that? Was there some kind of anger among the staff?
Real disappointment about how do we find ourselves in this position. So that therefore set it up for the challenge that was ahead, which is to change the way we did things and ensure that we met a standard in terms of how we ran the company that meant that would never happen again. And that's been that real commitment that everyone had, which is we just cannot let this happen again. So let's change the way we do things. And so people reacted in the right way, albeit it was really, really challenging in those first year or two.
Yeah, so obviously during that time the bank had a good hard look at itself, made some changes, which you then inherited when you took over a few years later as CEO. And did what happened with AUSTRAC make it easier for you to make changes that you wanted to make?
I think what happened with AUSTRAC certainly meant that we had to change, and everyone recognised that. And so there was a 4-year program of work to change the way we did things. And, you know, that was Peter King, some outstanding leadership in getting us through that. And I was fortunate enough to take over as chief executive at the tail end of that process. And it's definitely the case that we learnt from that particular challenge.
So that AUSTRAC thing was really the cherry on the top of the Hayne Royal Commission process that had come earlier. And Westpac didn't come out of that very well either. I mean, there was all sorts of bad behaviour were revealed.
Well, I think along with the rest of the industry, we certainly got found out in the context of what was brought about, revealed by the Royal Commission. And so, that was a culmination of, 3 or 4 very difficult years for Westpac. And as I said, the pride that people had in the company, they were so heartbroken that the company had not met the standards people expected, as identified in the Royal Commission, as identified by AUSTRAC. So that certainly gave us galvanised the workforce to really let's change the way we do things. And
so was that? I mean, obviously it was a turning point for the industry, but how do you reflect on that now?
Well, it certainly, I would never wish it on anyone, but to the extent that you have a challenge set or a crisis thrown upon you, not letting it go to waste was, I think, what we've done and what the team at Westpac has done, which is we fundamentally changed the way we run the company, the way we operate things, the way we go about things, the way we manage risk. And so I think we're in a much better place than where we were, albeit you would wish that we could have identified that and realised that well before the Royal Commission, well before any AUSTRAC.
Is banking as good a business as it used to be? And as good a business as the share market thinks it is, because the share prices of Westpac and in particular Commonwealth Bank are really high. And it's not just the Royal Commission and what came out of that's changed, but the extra competition and in particular mortgage brokers. Have they changed the business model of banking to the point where it's not as good as it used to be?
I think, well, certainly being a bank in Australia is still a privileged position. There's no doubt about it. Having a banking licence is a real privilege, and a bank run well can make a reasonably attractive, sustainable return for its shareholders. But there's no doubt that the competitive environment, and you called out one really good example, which is in the mortgage business with brokers and the way they are now servicing their customers, has changed the economics of the business. But that's the consequence of good competition. That's the consequence of the environment we're in. And so it's sort of like cry me a river to worry about what it was and, more importantly, what should it be. And what we've got to get focused on and what we are focused on is how do we become the best customer-orientated bank, the best customer-orientated company in the country. And in doing that, justify the opportunity to charge interest rates, charge fees and deliver product and service to our customers and make a return we need to.
Well, speaking of customer orientation, you're in Melbourne to open a new branch in Leongatha, right, which is a rare event. So obviously worth, you reckon, making a bit of a PR fuss about.
Well, we're certainly making a big effort to get our positioning in regional Australia right. And one of the things that I acknowledge and we acknowledge at Westpac is that we got that delivery of service into regional Australia wrong. We did close a few too many branches. And so, for example, we reopened Moree last year and we're now, tomorrow I'm announcing and visiting Leongatha, and we're reopening the branch in Leongatha tomorrow. So it's part of sort of getting that service proposition right in regional Australia. We did pull back a little bit too much and we're going to change it.
But the trend of branches is down, right? I mean, people aren't using cash anymore. They don't need as many branches. So, I mean, you've changed it. You would have closed a lot of branches since you became CEO, right?
Not closed any branches in regional Australia. We continue to work on what's the right model in metropolitan Australia, because 96% of what Australians do or what customers do with Westpac is digital or online. So that's a very significant change in how they think about and use their bank in terms of services and products. But it is the case that there is a role still for that point of presence in community, and that's something that we think we can and should be able to get right. And what it will do is just takes, I suppose, investment, time and effort to see what's the right way to deliver that service proposition in the community. And what people want is they want a seamless transition between something that's person to person, something that might be virtual, so over the call centre, or something that might be digital and online. And so how do we package that three ways of servicing the customer and get that right in all the areas and all the markets that we want to participate in? Yeah,
right. Speaking of cash, I understand there's like $1 billion $50 notes in circulation, which is more than any other note combined.
Yeah.
Right? So obviously that's about tax avoidance and money laundering. People are just hoarding the things, right? So do you think there's a case for banks being told to limit how many of them they give out?
Well, I think that's really a decision or a responsibility or something that I think falls to regulator,
of course,
parliamentarians.
I'm not saying, but are you kind of little bit troubled by it?
Well, certainly. I mean, some of the stats that I've seen and have shared with me by the regulators, close to half of cash payments have some connection or causation or correlation with criminal activity or tax avoidance. So therefore, that is a big problem for Australia. But there is rules and there are disciplines and there are regulations we follow which hopefully help mitigate some of those risks. The fact is that the community still wants to use cash, and so therefore that's part of our social responsibility, social function is to store cash and then give people cash when they need it. What I would say is the cash transit and storage industry has to fundamentally change because it's premised on a model where you had most of what people did was with cash. Now less than 7% of payments are via cash. And so therefore that economic model has to change. And that's what we're also working on as an industry is how do we make that more efficient?
And what about cybersecurity? I mean, that's at the forefront of a lot of customers' minds, I think. How many attacks do you fend off each day?
An enormous number of attacks. That's the entire banking industry. That's Australia, frankly. And so people should recognise, and I think many do, is that, this is a ongoing challenge globally, which is cyber war, cyber attack. And so that is a challenge for us. We spent, over $500 million last year on cyber fraud and scams mitigation and prevention. And it just highlights that, in this digital banking age, there's lots of advantages and attraction to digital banking services, but it does come with challenges around managing scams, frauds and cyber challenges. And what I would say is that, Australian banks working with the Australian government do work really well in holding the line and protecting Australia against that cyber threat.
How do you decide whether to compensate somebody who's been scammed or not?
And so that's part of the work that's ongoing, actually. And one of the foundations is who is responsible or who could have done more to ensure that person was not scammed. And one of the things that I want to acknowledge with the current government is the work they've done in creating a new framework for how we manage scams and frauds in Australia. And in particular, what they've worked on, and we've advocated strongly for this, is that the banks, together with the telcos, together with the social media platforms, are one entire ecosystem that need to work collectively together to stop, minimise and deal with scams. And part of the code of conduct that's being prepared and the regulations that Canberra is preparing will help identify when a particular participant in that ecosystem I've just described can and should be obligated to compensate.
So is that how you draw the line? Is it where you think you could have prevented it, you pay the customer the money? If you think that the customer's been stupid or whatever, then you don't pay the money. Is that kind of how it works?
It's anchored around what are the things that we commit to doing which help minimise or prevent the scam or the particular activity. And if we've discharged that responsibility, the question is, should that still fall to the bank that they compensate the customer? And our view, and it's been one which we think everyone has agreed, that doesn't make sense. But of course, if we don't meet the standard we should have met, we don't follow the process that we have agreed that we would follow, then that should fall to us in terms of compensating a particular customer affected. But most importantly, it's so critical that the entire ecosystem is accountable. And so therefore, social platforms alongside telcos, alongside banks, all working to stop scams is the only way we're going to have any chance of reducing and ultimately defeating scams.
Yeah, fair enough. Now, your chief economist, Lucy Ellis, thinks there'll be another rate hike in May. The market is saying another one after that in 2026. At what point do your customers start getting into trouble with their mortgages?
Well, first thing I'd say...
Your bad and doubtful debts are very low now, right?
That's right.
At what point does it start to rise?
So look, another rate rise would then return us to where we started when there was a rate reduction program that commenced in 2025.
Yeah.
And so therefore, it wouldn't be any worse than what it was last year, albeit I think the world has moved and continues to move in strange and unusual ways, which is...
And also other prices have gone up.
That's exactly right. And so other stresses are coming through for consumer. And so, for us, we would anticipate that certainly after the next interest rate rise, and if there is another needed, that would go some way to slowing the economy in the way that the Reserve Bank wants to obviously deliver the reduction in demand, to deliver the pullback on inflationary challenges for the economy. And in the meantime, what's critical for us is if customers have challenges or facing hardship, come to us early. If they come to us early, there's so much we can do to help them, for example, suspend payments, give people deferral programs and work through with them what they might be able to do.
Yeah, so, what's the chances, do you think, of a recession?
Oh, well, I think there's a chance of a recession. I think we need to acknowledge that. And in some respects, the classic technique by which people would focus on slowing down demand was to push economies into recession. I think the Reserve Bank has done a remarkable job over the last few years in terms of navigating the environment we're in. It's much more complicated today because of events in the Middle East over the last few months than it would otherwise have been. And so I think that puts more pressure on how they can get us through this environment without falling into recession. So I think we need to acknowledge circumstances have changed so much that a recession is a chance.
And what are you doing in your business planning about the war in Iran? How are you thinking about it?
Well, certainly the key is how long is this war going to go on, but more importantly, how long does it take for supply chain disruption, supply chain consequences to be resolved? And so what we're focusing on is how do we help every small business, every medium size, every large enterprise address that challenge that they're seeing in their supply chains, what they're seeing in their cost inputs. And so, I think it's a question of time. And it's also a question of just actually how quickly will the supply chain restore itself such that we get some normalisation in at least supplies and then, of course, normalisation in prices that they're up.
But do you have to make a call about that? Do you have to, in terms of planning for the business and what might happen to interest rates and all the rest of it, do you have to make some sort of call about that?
Absolutely. And what we're focused on now is that we've got the capital position of the bank the highest it's ever been, higher than our peers at this point in time, got the balance sheet in the place that means we can and are very committed to saying to customers, if you need help If you need additional liquidity, if you need additional time to solve challenges that you have, we're there for you, because that's what we need to do if we want to be the bank we want to be for our customers. And so therefore all the work we're doing now is, what are the actions we can take? What are the engagement we can have with all of our customers, particularly small business, medium-sized and large enterprises, in terms of saying, what do you need? Here's what we can do. Call us if you need any help in terms of getting through this challenge that we see for at least the next 3 to 6 months.
Are you saying that because you've got a lot of capital, you've got a bit of room to move in helping people? Is that
well, we've got a balance sheet that gives us the capacity to support and be far more willing to provide additional liquidity to businesses that are having some working capital challenges, for example, to be much more patient in when and how they might repay their loan because the circumstances have changed. And so it's all about, how do we use the strength of our position today to support the customer and get through the next 3 to 6, and it could be longer, months that are needed to get to a somewhat normalised position. But it all depends, Alan, on whether this war does stop and how quickly it does stop, and then obviously how quickly people can get back to situation normal.
You've got a transformation project going on in the bank, I think, called Unite. Is it called Unite because what you're trying to do is pull together all the different silos, technical silos into one? Is that, or one?
Yeah, I think that's
what's going on.
I think there's two elements to the word unite. You're right, absolutely. One of those reasons is to consolidate everything. The other is that, let's get behind this. And so it's about how we galvanise the workforce. But simply what Unite is doing is that the bank today, as a group, currently has 3 different banking systems. And so therefore Is that Westpac, St George and a Bank of Melbourne? Is that that's correct?
It?
Westpac, St George and versions of Bank SA, Bank of Melbourne and other bits of system.
Are you going to keep those other brands?
What we're very focused on is getting everything done one way, following one policy, one process, one system, and identified and put onto one target system. Okay, and so therefore it's about one way of doing things. And that at least gives us the benefit of the market share we have. Because currently today, we have a 20% market share in mortgages, but it's split across 3 different banking systems. So it's like I'm running 3 small regional banks from a cost to change and run. And what we need to do is get everything done one way. It's not about brands. We think there's a strategy and it makes sense to have different brands based on different targets you want to go after. How many brands and what they do, we'll continue to ask ourselves, have we got it right? But most importantly, that's not the key challenge for us. The key challenge is, let's get everything done one way on one system, and then thus we have one bank. That's
hopeless, having three banks in the place. I mean, how did that happen? That's terrible.
Oh no, I think it's too easy for me to sit here and try to opine on decisions made in the past. But what I would say is that choices were made in the past, and now we make a choice in terms of how we set the company up for the future.
To what extent does the project involve AI?
AI does have a role to play because, there is certainly some capacity and capability that tool brings to our employees and how we're going after the various pieces of work or work packages that represent Unite. So it does have a role to play. But we also need to be realistic. There is a lot of advocacy, a lot of hype as it relates to AI. I think it's going to be a very significant, quite profound contributor to what the bank is and what it will be in the future. But the most important thing for me and for the leadership team at the moment is to get Unite done safely and to the standard people expect. And to the extent that AI can help, then it will. But it's not the transformational unlock that I think sometimes people think it is.
Do you think that AI will allow you to reduce staffing levels? I mean, and I ask because Macquarie Research put out a report last week saying that staffing reductions across banking can be 18%.
Yeah.
And they actually said that Westpac would be the biggest beneficiary of AI because you use more outsourced providers. Is that right?
Well, certainly I think AI will help our workers be more efficient and deliver more. So that's one thing that we think will be the case. But it is the case that we need to train our people. We need to be far more efficient and capable in how we use that tool to get things done. But I do think one of the near-term opportunities, and when I say near-term, 3 to 4 years of work to get there, is that we do have quite a bit of contingent work and contingent labour based on extra demand needed for our services. We rely upon external providers.
Do you mean by contingent? Do you mean casuals?
Outsourced working. So whether it be extra investment needed in a particular program.
Right. So apparently you've got the most outsourced.
And so to the extent that we look at how we optimise our workforce for the future, I think having less contingent workers because our workers with the right AI tools, right training and right leadership can and should be able to do more efficiently will mean that we can catch that extra work and we won't need that outsourced, if you will, surge in demand kind of resources that currently we're relied upon. But that's all talk for the moment, Alan. This is about how we embed this and prove to ourselves that we can do that and do it safely.
Yeah, but is what you're saying that you don't think you'll retrench people, lay people off for AI? You don't think that's going to happen?
I think jobs will change and there will definitely be roles that will no longer require people. But that's no different to typing pills 40 years ago replaced by personal computer. Different roles will emerge. I think one thing that people should reflect on, 10, 15 years ago, everyone advocated you've got to digitise the bank, you've got to automate, have straight-through processing. And there were a lot of changes in how we operated the company. But no one in any of those business plans set out for me the fact that I would need today, as I have, 500 people working on scams and frauds. No one in those business plans contemplated $500 million per year on digital scams, frauds and cyber prevention when we identified a digital automated environment 10, 15 years ago. And so likewise, roles today impacted by AI do not and are not clear about what new roles and other opportunities are created. So the key for us is how does our workforce evolve and how do we help train people to do new roles augmented or assisted by AI and other tools that are clearly coming out.
Yeah, but if some of the predictions about the impact of AI come true, half your customers will be out of work.
Well, I mean, everyone's excited about what it could be in the future. I think we need to recognise I think it's a reasonably profound opportunity, AI. But I think the dramatic headlines and the fact that equity research analysts love to try and call out spectacular changes in cadence and operating doesn't mean it necessarily follows.
Yeah, fair enough. Just finally, I want to get on to housing affordability. Now, obviously, there's a lot of talk about that and intergenerational fairness. First, can I ask, are you concerned about all this?
Yeah, I think for Westpac and I think for banks in Australia, contributing to the solution for the housing affordability challenge is one of the key challenges we have to solve. We have to contribute to how does society get to a point where everybody feels that opportunity to own a house or own their own apartment or their own house is within reach. And at the moment, large proportion of the population doesn't think it's realistic, and we've got to solve for that. And it's fundamentally a supply challenge, and it's fundamentally about solving for a supply challenge at the right price point. And so, therefore, what can we do and how are we contributing and how are we working with regulators, government, et cetera, to deliver?
But isn't it the case that the banks themselves are partly responsible for the problem by lending too much?
Well, we lent money following the responsible lending guidelines prescribed by the regulator. So we've not lent too much money. We've lent in accordance with what the regulations require. I think also that's meant a lot of people have had the opportunity as a result of our capacity to finance them to go into the property market. And if you think about for Australians, the dream of owning a house is one that most have. Secondly, we have a fiscal setting which inspires people to own their house because of the principal place of residence exemption and things like that. And so therefore we've supported people in what they wanted to go after and which they've been incentivised to go after, whether it be that cultural phenomena of own your own property or that fiscal incentive of the tax relief because you own your own house. And so we've participated in that. And most importantly, I think we could say we've participated in that responsibly because we can only lend to someone if we discharge our obligations around responsible lending. Yeah,
but were the regulators also partly responsible by shifting the capital weighting rules to favour real estate over business so that the banks, including Westpac, shifted their emphasis from business lending to housing lending? Do you think that was part of the issue?
I think it's had a contribution because there's no doubt that 30 plus years ago with Basel 1, Basel 2 coming into operation, the weighting attached to the risk of a home loan was adjusted such that we held less capital versus a home loan than what we had previously. It didn't change business.
And the banks went for it.
Well, and you would expect that.
Yeah.
Economic rational behaviour, which is there's an opportunity to make a reasonable return with lower forms of capital here than we would otherwise have to hold, and we went after it. More importantly, That then facilitated a massive increase in home ownership across the country, a massive increase in home building, construction activity and economic benefit for all. And so I don't think it's all doom and gloom that we liberated that, but we certainly made a contribution to that opportunity for everyone to own their own home. What we've got to do now, though, is make sure that people don't feel they don't have that chance themselves because of the supply challenge that we need to solve.
Do you think what the current government's doing to fix this problem or deal with it is the right way to go? I mean, should there also be a change in the way banks are regulated? I mean, just taking one thing at a time, do you think that the focus on supply that is going on, the 1.2 million homes over 5 years, is going to be enough?
Well, I think enough. You need that to be even a chance of solving this challenge. We need more houses, and most importantly, houses at the right price point. And so what has happened is we are building houses. Median house price in major capital cities is approximately $1.1 million. Median income of Australians is approximately $90,000 to $95,000. And if you therefore put a mortgage over that median income, the maximum you can really purchase is about $600,000, $650,000. So we've got to build more houses in the $600,000 to $700,000 price range. And so what are we doing and how are we adjusting the way houses are approved, the way construction is allowed, and the productivity in that industry to drive more house or unit production at the right price point? One of the unlocks, in my view, Alan, is regional Australia. The median house price in regional Australia is approximately $650,000. One of the contributions to giving more people more property at the right price point is to encourage more people to live in regional Australia.
Yeah, but they've got to get to work.
Well, and then, of course, we have an environment where all of a sudden the capacity to work both in the office and remotely is a calibration that we've got more flexibility on than we've ever had in our history. And so, therefore, it feeds into part of the solution. The other is, of course, there's opportunities for businesses to put more resources into regional centres where they can attract the right talent because the talent can A, get a job, and B, can buy the house of their dreams in that regional setting.
So are you telling your staff to work from home and then go and live in Bathurst?
I'm providing an environment for my staff where they have flexibility and, more importantly, what's the best way for them to be their best and deliver their best each day in the company. And so that's what we're working on. If it's the case that they can discharge their role living in a different area, then we'll work on that.
We'll have to leave it there. Thanks very much for talking to us, Anthony Miller.
It's been a pleasure. Thank you very much.
Thanks so much for joining me for another episode of That's Business with me, Alan Kohler. You can find That's Business on the ABC Business Daily feed. You'll hear from me every Friday. Follow ABC Business Daily to find us on ABC Listen or wherever you get your podcasts. Carrington Clark will be back in the feed on Monday.